Right, hello everyone. Zaheer Anwari here on behalf of the dynamictrader.com. Thank you all for attending this week's FX Street analysis. Hi Ali. Hi Nat. Hi guys. Right, I'm assuming you guys can hear me and you can see my screen. Okay. Right, before we get into the analysis, just like to direct you all to the apprentice training that I am currently doing. If you want to know a little bit more about trend trading and how to break down a chart, how to use candlesticks, chart patterns, support and resistance, basically all the different elements that go to making trading into a complete picture, as well as entry points, exit management, compounding, stop management, portfolio management, all the different elements of trading. I've created an apprentice course that will allow you an environment to put that into practice. Okay, I'll direct you guys again to this website at the end of the presentation, but just to make you guys aware, the link is zaheer.tdtpro.live/about. The next training for this particular course is on the 6th of February. So not this Saturday coming, but the following Saturday. So plenty of time to look at the website. Just real insight and practice and development into being a complete trend trader. So please have a look at that. Okay. All right. Let's get into doing some. Hi, Maurizio. Hi, guys. Thank you all again for attending the webinar. I'm just going to switch to my eSignal platform. So please let me know when you can see the platform. Administrator, can you see my eSignal platform, please? Yeah, brilliant. Thank you, Adinda. Okay, fantastic. Last time we had a little bit of an issue. I think at some point my platform got dropped by the server. So if that does happen again, then please let me know. Okay. It's been a bit of an interesting few days in terms of what's happening in the markets, and this is really where, as traders, we need to understand how to apply patience. Patience is a real important trait to being a top trader. It's essential. Trading is not made. Money in trading is not made like a 9 to 5. It's not made like a salary, and this is where a lot of people sometimes find trading a challenge, and that is why a lot of people then go down the route of day trading. Now, I'm not saying day trading can't work. It can work, but there's a lot of challenges that come with day trading, which can end up being quite stressful for private traders. A far better approach to trading is to move your trading onto the larger time frames and using the power of compounding to accelerate profit. So what that means is that when you are compounding, that doesn't mean that you need to be trading all the time. It just means that you're trading in the right times and allowing the market to effectively work for you. And current market conditions are kind of dictating that. We are seeing moves against the major trend, but there's a reason for that. And that is, we can't expect price to continuously move in a single direction. It doesn't do that. There's a natural rhythm to price. It moves, it breathes, it moves, it breathes. And we need to embrace that. Okay, so what we're going to do is go through some of the charts that I'm looking at, and we can actually see this currently in play. And what is my stance, and what am I waiting to happen for me to then start taking action? Okay, so a lot of you guys should be familiar with the chart setup that you can see in front of you. If you have any question, by the way, guys, please put them in the chat box and I will be happy to answer them. Okay. What you can see in front of you is a typical chart setup. You've got the watch list on the left hand side. It's quite an extensive watch list. Aussie dollar, US dollar at the top, going all the way down to the South African rand, Japanese yen at the bottom. So it's a very extensive watch list. Don't let this scare you. At any moment in time, there's only 3, 4, 5 currencies worth looking at, and for weeks to months at a time. The advantage to having a big portfolio or a big watch list is that you can then take advantage of the best trends. If you're looking at just the euro dollar, you're going to be trading at a time when the euro dollar is void of any liquidity. It's just stuck in a range. So if you're looking at that all day, every day, then you're missing out on better opportunities elsewhere. Monthly chart, top right corner. This is where I have my major levels of support and resistance. Now, usually people draw support and resistance on a lower time frame. So they may draw it on the daily chart, but then they'll also go down to a 4 hour or 1 hour and start drawing support and resistance there. The lower down you go, the more noise, the more candlesticks, the more support and resistance. By looking at the monthly time frame, you get a very clear idea of where these support and resistance levels are. So I have a tool based on an algorithm that will automatically highlight these support and resistance levels for me, giving me very clear levels. The weekly and the daily is where I look for trend direction and alignment. So what I'm looking for as a trend trader is to see the weekly and the daily moving in the same direction. So what I have is the 200 moving averages on both. So you can see the black line going across. That's the simple 200 simple moving average. What I'm looking for is price to be below both of the moving averages in a bear trend or above both of them in a bull market. And remember, this logic goes back to before the internet. The 200 moving average was used to indicate the long-term direction of the trend. Before the internet, charts were drawn by hand. Indicators were calculated by hand. So traders were very particular with the information they put on their chart. The 200 moving average was proven to be a very good indicator of the long-term trend direction. We still use that logic today. Just because we've got technology and software doesn't mean that we need to change our approach. We should still use that approach of the long-term traders, just have the advantages of software to remove all of the manual labor. So you can see here now, looking at the Aussie dollar, US dollar, on the weekly and the daily, price is below the weekly and the 200. Price is below the weekly 200 on the weekly, the daily 200 on the daily. In addition to that, I have a trend filter. So instead of the standard red and green candlesticks that you can see on this particular page, I have a trend filter that's highlighting bullish and bearish trends. So what I'm looking for is the trend filter to be red on the weekly and on the daily when I'm in a bear market in relation to the 200 moving averages. And in a bull market, when I'm above the 200 moving averages, I want the trend filter to be green. So for example, if I go to the Canadian dollar, you can see that the trend filter is green on the weekly and the daily, above the 200 on weekly, above the 200 on daily. Okay, so that's what I'm looking for. Monthly, support and resistance. Weekly and daily is where I'm looking for trend direction and alignment. Okay, now if we start on the Aussie dollar, US dollar, we can see that the long-term trend is bearish. It's been bearish for a very, very long time. I mean, the high is going back to 2011. So this is the high at around 1.10 round number. And we can see that it's moved to the downside and it's now around 0.70. So it's fallen 4,000 pips. So our bias should be a continuation of the trend, because remember, the trend is your friend. It's currently struggling, and it's been struggling since September of last year. But remember, the longer the consolidation, the bigger the breakout. And the trend suggests that it does break out and in the direction of the trend. So if I just open up the chart, we can see that it's struggling at the pink line low. This is the low, by the way, of 2015. And you can see that the low of 2015, the round number 0.70, this is all acting as a support zone. And price tried to break through it, but the bulls have come back and pushed price back up into this zone. So it's still in this consolidation. This is where we need to apply patience. This is exactly what I'm talking about. You don't want to get caught up in these trades during areas of consolidation. You want to really be trading the trends. You want the markets to work for you. You want to be where the money is. When there's consolidation, there's generally a battle going on between the bulls and the bears, which is kind of even. You don't want to be in that environment. You want to be in an environment where either the bulls are in control or the bears are in control, so that you have the market moving. You have momentum. You have directional momentum. That is what we should be looking for. So what we're looking for is a breakout to the downside, and we want directional momentum to the next level of support, which is here. And that's at the round number 0.6. Round numbers are very relevant. If price clears this level, we then want it to move towards 0.5, which is here, or 0.48 more precisely, but it's around 0.5. So we want price to move to 0.6 and then 0.5. That's a good 2,000, 2,200 pips. As a trend trader, that's what I'm looking for. Most day traders are looking for a few pips. And because they're only looking for a few pips, they risk generally large amounts of capital. But then, that becomes quite stressful. And if it's a losing trade, it can be quite frustrating. You then risk large on the next trade to cover your losses. It's a very unnecessary way of approaching the markets. The smarter way of approaching the markets is to think long term. have a small initial risk, maybe 1 or 2%. And then as the trend develops, repeatedly compound so you can accelerate profit. And over a period of 6, 7, 8 months, a trend can easily return you 20, 30%. Easily. And if you have 3, 4, 5 of these trends a year, you can have a very, very profitable year. Trading is generally not what most people think it is. It requires a particular approach. If you go to the weekly, we're below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. If I open up the daily chart, what can we see? Well, we can see that price broke and closed below this support, which became resistance, but has since gone back into the consolidation. It's come back to retest a round number 0.7, so it's zonal area. I'd like to see a reversal at this area to the downside. I'd like to see price break through this support and then a continuation. If it continues to the upside and it breaks through the daily 200, that's when my bias will change. That's when I'll start looking for long opportunities. For now, this is just in no man's land. And I didn't take this first trade based on a breakout because of the length of the consolidation. If the consolidation is longer than 3 months, and you can see this consolidation is from September all the way through to January when it broke out. So you're looking at 4 months pretty much, 3, 4 months. That's longer than 3 months. I don't take the first breakout because the first breakout can usually be a fake out or fake breakout. And you can see that's what's happened. The next breakout is where I would enter. So a break and a close below here, and this will give me an entry point. I have positions running since this first breakout back here, which is around July. So I have positions running. When price breaks below here, I can start adding further positions and compounding. Okay, so the Aussie dollar is on my watch list, but until it actually breaks out, I'm going to be standing aside on this. US dollar, Canadian dollar. Long-term trend is bullish. You can see we had good momentum to the upside. So January did start off really, really well. We had good momentum to the upside. And since then, we've seen a reversal back to the downside. Prices come back to that round number 1.40. Okay, we want to see this level hold strong as a support level, 1.4. We don't want to see price close below 1.4. By the end of January, I want to see price close above 1.4. This will then act as a support, and I'd then like to see price move towards 1.5, 1.6. So I want to see price move up to those levels. If we're looking at the weekly, we're above the weekly 200 and the trend filter is green. So bullish bias, bullish trend. Daily, exactly the same. Bullish bias, bullish trend. However, let's open up the daily chart. Look at the length of the pullback. It's quite a deep pullback, and this is where people struggle. But if you look at price from this moment here, which is going back to October, it's moved in a very neat and linear fashion. So it would move, breakout, move, bit of a consolidation, big move to the upside, a bit of a pullback, and then another breakout. And we've now had price pull back to 1.40. Given how neatly this has moved, this pullback is hardly unsurprising. It is a fairly deep pullback, but we want to see 1.40 hold strong. We are seeing indecision today. I feel see a little bit more indecision and then a move back to the upside in the direction of the long-term trend. A break and a close above here will give us an entry point. Now, depending on how aggressive or conservative you want to be, will depend on where you want to trade it in relation to 1.5. Because 1.5 is a half figure. It's a level of resistance. So if you get a good entry point and you want to eliminate risk before 1.5, that's one way of doing it. That's the aggressive way. The conservative way is to wait for 1.5 to clear and then trade it to 1.6. So it really depends on the style of trader that you are. Okay, so the US dollar, Canadian dollar, again, patience for now. If you look at the weekly time frame, we are seeing indecision as well. So indecision at support, that's a positive sign. We could potentially see a reversal back to the upside and then a continuation. Remember, something this is really, really important as well. Indecision does not mean reversal. Okay, a doji, a spinning top, it's an indecision candle. It doesn't mean reversal. It means indecision. However, indecision at support can mean a potential bounce to the upside. Okay, playing on probabilities. Let price make its move and then act accordingly. Okay, CAD Japanese yen. We can see the trend is bearish. Broke below 90. trading below the pink line levels, saw price move to 80, break below it, but again, short-lived. The bulls have really come in and pushed price back up again. We need to apply patience. We want to see this support level cleared and then price move towards 70. Weekly, below the weekly 200, trend filter is red. Daily, below the daily 200, trend filter is red. Again, look at the depth of the pullback. If you look at how quickly it's moved, this is hardly surprising. Here's a good example, guys, by the way. Look, we got 3 days of indecision, 3 days of indecision at 80, which is acting as a support level, and we've seen a bounce to the upside. However, I would expect this bounce to be short-lived, given that the trend is down, the bias is bearish, and the same on the weekly. Trend is down, bias is bearish. So my bias is always in the direction of the long-term trend. Sometimes what that means is applying patience. However, when price does break out, I can compound. And I can start seeing accelerated growth on the profit. Okay, so the CAD Japanese yen, that should be on the watch list. Now, one thing to note, I'm just going to bring up the euro dollar. If we look at the euro dollar, and the euro dollar was in a very nice trend back in September 2014, mid 2014, all the way down to March 2015. That is a pretty long trend. Now, if we just look at this area here, there was a pullback, but because how far the trend moved, this looks pretty insignificant. And this is, in hindsight, everything looks rosy. But if we actually move it back to as if it was happening today, if I just remove the trend filter, okay, you can see the pullback is pretty deep. It's a pretty significant pullback. So, and this is the problem. If you get caught up in intraday noise, or if you get caught up trading in pullback periods, it can seem quite hair-raising. But if you let price just do its thing, if you look at how quickly it moved from the bounce off the value index, it moved very, very quickly. Very small pullback, breather areas, big red bars. It moved very quickly. So the correction was of some significance. However, what we had was a head and shoulders pattern in a downtrend. And once confirmed, a continuation of the trend. And if you look at that same period now, it seems insignificant really in relation to the long-term trend. Excuse me, I'm just going to grab some water, guys. Okay, so my advice is to really sort of be patient during pullback periods. If you start closing off positions, start panicking, and then you see moves back in the direction of the trend, then you're going to get pretty annoyed, and then you're going to start trading in anger, chasing trades. Don't be like that. Have an understanding of price. Understand that price is not always going to move in your favor. Understand that at certain periods, you'll be giving profit back to the market. So at this point, say for example, you start adding short positions. At this point here, you were £10,000 in profit. Then price moves against you. At this point here, you're down £1,000, so you're £9,000 in profit. This is where people start panicking, closing positions. However, when price moves out, breaks out, I add another position. So I now have further compound growth. I'm not growing in a straight line. I'm going to be growing exponentially. And that's currently what we're seeing here. Looking at the euro dollar, very much sideways. It's in consolidation. So the euro dollar is not something that I'm interested in or one that I remotely want to be trading at any point until it breaks either out of support or out of resistance. And if we look at the time frames, we can very clearly see it's in consolidation on the monthly. Weekly is red, but going sideways. Daily is red and green. Below the daily 200, below the weekly 200. So we do have alignment between the bias, but the trend is, apart from it being sideways, we've got red trend filter and green trend filter. Remember what I said? We want the weekly and the daily to be moving in the same direction, and they're not at the moment. Don't get obsessed. Don't get caught up in the hype of being attached to the euro dollar, being attached to major currencies, being attached to gold. Your attachment should be for as long as it's paying you. As soon as something stops paying you, drop the currency, move on to the next currency. Okay, so the euro dollar, not one that looks very appealing. Okay, euro Canadian dollar. Notice what I'm doing. I'm going through all the Canadian currencies pretty much, apart from the Aussie dollar, US dollar, which I showed you. I've gone through the US dollar, Canadian dollar. We've looked at the CAD Swiss franc. Okay, we looked at the euro dollar, and euro dollar is not looking interesting. But the US dollar, Canadian dollar, the CAD Swiss franc already in trend. I already have positions running. We're now looking at the euro Canadian dollar. So this is what I mean by going back to what I said earlier. Currencies move in groups. Euro Canadian dollar, we've had movement to the upside. Price is very much stuck in this sort of consolidation, right, range movement. Price had tried to break through this high, failed, broke through 1.6, failed, and has come back down and is now back within the pink lines and the consolidation. So not a good looking chart, not a good looking setup until price clears this pivot high. When price clears this, then we can see price move towards 1.7, 1.8, 1.9 to 2.1. Those are the levels. On the weekly, above the weekly 200, and the trend filter is green. And on the daily, above the daily 200, trend filter is green. Again, look, going through another period of pullback. Look how deep that pullback is. Quite a deep pullback. And that's because price found resistance at 1.6, a bit of indecision, and we've had a correction to the downside. It's currently faced with a support zone. So we've got support here. We've got support here at 1.5. If it breaks this support zone and it goes towards the daily 200, that will be the next level of support. If it breaks through here, then support will become resistant. We'll see price go towards 1.4, potentially 1.3. But in general terms, just not a good looking chart. We want a chart that screams at us, that says, hey, trade me. It's very simple to trade. This is not a very good looking chart. And it's not even one that looks appealing on a pullback. I know people like to trade pullbacks, but you've got this level acting as resistance. So if you enter here, you've got this pivot high acting as resistance. So the trade has the potential to not last very long. So again, what's the point? To make a small move worth anything, people risk large. And that then becomes quite a, as I said, hair-raising journey. Don't get caught up in that. Okay, let's move on. Next currency we'll look at is the pound Canadian dollar. We can see that price is stuck in an area of consolidation. The figure 2 is acting as support. What we really need to see is price break out of this consolidation. And as the long-term trend is bullish, we favor a breakout to the upside. So we'd like to see price break and close above 2.1 and then move towards 2.5, maybe even the high around 2.7. So those are the kind of levels that we want to see price move towards. Weekly, above the weekly 200, trend filter is green. Above the daily 200, trend filter is red. So the bias is good. Weekly 200, daily 200, the bias is good. However, trend filter is green on the weekly, trend filter is red on the daily. Remember what I said? We want to see the weekly and the daily moving in the same direction. This is currently out of alignment, out of sync. Price is still stuck in this consolidation. Remember, longer the consolidation, bigger the breakout. Just let price do its thing. We don't need to get caught up with this. I know it's heading towards the weekly 200 and, it's heading towards the daily 200 and the figure 2. This is a support zone, if you like. If it clears this level, then potentially 1.9, 1.8. Until it clears those levels, don't get involved. Okay, and the final currency that we will look at is the Singapore dollar. Okay, now the Singapore dollar is a currency that I do like to trade. I've traded it several times in the past for very good profit. It's one of the few exotics that I do trade, and that's because it trends very well. If you look at the monthly chart, sorry guys, let me just there you go. Okay, if you look at the monthly chart, you can see the history. There are histories of very good trend on this particular currency. So the history is always a good sign of what the future is going to be like. We don't want to get involved in a currency which is very volatile. What we want is a currency that has directional momentum. Yeah, so don't think in volatility. Volatility, yeah, we need volatility, but we need volatility in a direction. If you look at it intraday, volatility is kind of all over the place. But if you look at it on the bigger picture, that volatility generally has strength in a particular direction when trends are in play. And we call this directional momentum. That's what we're looking for. So you can see here, looking at the Singapore dollar, long-term trend is bullish. If I just open up the charts, it's faced with the pink line high of 2015 acting as resistance. It's tried to break through it, struggling. It's still above 1.4, so I'd like to see this hold strong as support. I'd then like to see a breakout to the upside and then price move towards 1.5. Aggressive traders will get in and make some profit. And at 1.5, maybe tighten stops. Remember, don't close positions. Always just manually tighten stops. Don't close positions. Closing positions is based on fear. And remember, support and resistance levels will get broken when price is in a trend. So 1.5 at some point will get broken and price will then move towards this level and then 1.6. Your bias should always be in the direction of the trend. Don't predict reversals. It's insane because like the expression, the trend is your friend, is well known. And everyone hears it, but yet it's very, very badly practiced. People are always trying to predict reversals. People are always trying to predict tops and bottoms. What happened to the expression, the trend is your friend? That is the direction that you should be going in. When price gets to a level of support or resistance, so in this case, in a bull trend, when price gets to resistance, that's where you have to apply patience. That's where you have to apply patience. That's where you have to be like, well, I need to see what price is going to do. If it's going to reverse, well, I've tightened my stops. Ideally, it's going to continue. I can compound further. Never predict. Let price dictate. It's a really important point. Okay, that's the Singapore dollar. So on the weekly time frame, trading above the weekly, trend filter is green. On the daily time frame, trading above the weekly, trend filter is green. And again, like all the other currencies, we're seeing a correction to the downside, looking for price to hold at some kind of support level. So you've got support levels here, a couple of support levels, and we've got this pivot high here as well. We really need to see this whole area taken out. Price break and close above this pivot high. Remember, when a high is cleared, price will go on to create new highs. So once price has broken that high, that is when we'll be looking to enter trades if you are on the aggressive side. If you're on the conservative side, wait for 1.5 to clear. Okay, and that's my watch list, guys. Those are the currencies that I am looking at. Those are the currencies that are making up my my watch list. Are there any questions? I'm looking. I am looking at the the conversations going on. Are there any questions regarding any currencies or anything that I've gone through? No, I don't think there's any questions coming through. Can you guys hear me? Okay. If there aren't any questions coming through, then I will call time on today's webinar. There's not much going on. It's very quiet. The fact that I've got through my analysis in half an hour shows that there's not much going on. Missed MRC. MRC, is that yep for a question, or yep, it's very quiet, or yep for something else? This chat room is generally quiet. I'm not quite sure why that is. If I look above, there generally seems to be a lot of conversation, and then when people come into my presentation, it goes very quiet. And I can kind of understand that, because trend trading, there's nothing sexy about it. People like day trading because it's these, it's advertised as a sexy way to making money. You can find a lot of forums where people are packed sharing strategies, and hey, I made 10 pips on a 4 pip stop loss, and you see all of this kind of going on in chat rooms, and people getting excited and high-fiving each other. Yeah, Fed news again. Like, why? What's that going to do for your trading? That it's by the time you hear it, by the time you've heard what the Fed has to say, that's already been filtered into price action. The big dogs get that news before you. As private traders, that's old. By the time you've heard it, it's old. Even by a few seconds, it's old. It's already been factored into price. What you guys should be doing is letting the news just get filtered in and going in the direction of the long-term trend. Think about the US dollar, Canadian dollar. How many NFPs have come out? If we go to US dollar, Canadian dollar, NFP comes out the first Friday of every month. The first Friday of every month. The trend has been bullish since 2011. So how many NFPs have come out since 2011? That's 12 NFPs a year. We're now in 2016. That's like 50, 60 NFPs. What's that done to the direction of the trend? So, guys, you need to step away from trading the news and getting caught up in the news and looking at trading at looking at price action. Price tells you everything that you need to know. If you're an institutional trader and if you have access to that information, that's fine. But we aren't institutional traders. Institutions pay thousands and thousands of pounds a month to get information early. Most private traders are looking on Yahoo or watching some kind of delayed news terminal that by the time you hear it, that news is old. So I really don't, it's really unnecessary to get caught up in the news. And, that's valuable time. That's your time that you could be doing something more productive with, spending it with your family, reading, working on yourself, understanding charts, understanding analysis. That you could be using that time more productively than staring at the news and wondering what the next Fed reading is going to be, or interest rates, or any of that, because it all just gets filtered in. And it has very, very, very little impact on the long-term trend. It may cause a pullback, it may cause a breather, a little bit of intraday volatility, but ultimately the trend is your friend. Okay, guys, any final questions, or I'm just going to call time here. Yeah, the big dogs have a plan. If a trader wants to trade well, you should also have a plan. Yeah, I totally agree. But also at the same time, you want to be trading in the direction of the big dogs. The big dogs are the ones that ultimately move the market. So if you look at the euro dollar, we've just gone through the euro dollar. The euro dollar is in consolidation. So why would you trade the euro dollar? The big dogs are not in the euro dollar. Ali, I don't know. My answer to that question is I don't know. And ultimately, I don't care. The reason for that is this. If we look at the euro dollar is in consolidation. I traded the euro dollar when in this bear trend here on the monthly time frame. I traded the euro dollar for 15,500 pips. And you can see there's that directional momentum to the downside. From 1.3 to 1.1, that's a move of 2,000 pips. But with compounding, I leveraged it to over 15,500 pips for very, very good percentage growth. Very good percentage growth. But if you look at it since that trend, it's in consolidation, because after every move, price consolidates. So whether it moves up or down, it doesn't matter. It's still in consolidation until it actually breaks out of this support level or resistance to the upside. I'm not interested in the euro dollar. So to answer your question, Ali, it really doesn't make a difference to me whether price goes up or down. It's stuck in consolidation. What you should be waiting for is the big dogs to move the euro dollar, for them to say, right, we need to move this out of consolidation. Whether that's to the upside or the downside, we can't predict. We have to wait and see what happens. The strength is always with the trend. So the chances are it has more chance of breaking out to the downside than the upside, purely because of what happened before. Trend, consolidation, trend. And we can see that here. If I open up the chart, look, we had a trend, correction, trend back in the direction of the trend. This is from 2001 to 2008. That's a 7-year move to the upside. After every move, price consolidates. That's why it went through this consolidation. It cannot consolidate forever. It has to break out. It's broken out to the downside. We now like to see this move further to the downside back towards 0.80. That's the natural rhythm to price. Within all of that, you're going to have X amount of news, X amount of this, X amount of that. But ultimately, it's all going to get fed in. It's going to get filtered. It's going to get absorbed. And the trend is all strong. Okay, so that is what you need to do. What you need to do is understand how the big dogs trade, but don't copy them, use them. You can't compete. You can't compete with an institution that has billions of dollars. You can't compete with that. So you need them to move the market and then jump on their back and piggyback the ride. That's the power of trading. Okay, you're welcome. The brokers play games with new traders. Stops. Yeah, the problem is though, Forex Piper. I hope I'm saying your name correctly. The problem is that new traders have tight stops. Of course, if you have a stop of like 4 pips, 10 pips, 20 pips, you are going to get stopped out, regardless of whether brokers are stop hunting or not. You are going to get stopped out. If the average true range, I surely euro dollar is going to head up. Okay, Joe, if you think the euro dollar is surely going to head up, why don't you remortgage your house and put it on the euro dollar? Yeah, this is a serious question. Why don't you remortgage your house and put down the euro dollar? Because we all know that there is no guarantee in what is going to happen. The only thing that is certain is the uncertainty of what is going to happen next. Everything in trading is based on probability. You can't say things like surely. The market does what the market does. Okay, so this is what I mean. You can't predict. So I don't agree with that. You may be right. It may move up, but surely, so 100%, you can't, because you don't know what's going to happen next. Okay. The brokers play games. Going back to what you were saying, Forex Piper, if the average true range of any currency, let's say, for example, the average true range over the last week is 100 pips, or per day it's moving like 90 pips, 95 pips, and you're using a stop loss less than that, you are going to get stopped out. If you look at what the turtle traders did, if you don't know who the turtle traders are, you need to know who the turtle traders are. The turtle traders used a mathematical formula. They used something like ATR 15 times 3. I can't remember the exact mathematical formula, but they took the average true range over the last 15 days and they multiplied it by 3. So they were using stop losses that were larger than the average true range. Most new traders don't have a clue about that and are now using stop losses which are less than the average true range. And so they then think that the brokers it's a personal thing with the brokers, and brokers are stop hunting. A big part of where new traders go wrong is a total lack of understanding of where to place your stop. And there's a lot of focus on entry points, breakouts, pullbacks. Hey, I found an entry point, but what about after the entry point? Where is the trend going to develop to? Where is your stop loss? How are you going to compound? What is your risk management? There is more to trading than just an entry point. Okay, Ali, Zaheer, any advice on when to actually place a trade? I mean, along the movement of the trend line? Yeah, good question, Ali. I always place trades at the close of the day, first and foremost. So I will wait. So I'm here in the UK. So the close of the bar is at 10 p.m. UK time, 10 p.m. GMT. So I will wait for the bar to close. And then when it has confirmed a breakout, that's when I place a trade. So I like to trade breakouts. Okay, breakouts are a really good way to trade because it confirms the trend. A lot of people focus on pullbacks because they're trying to make more money. But how do you know whether a pullback is a pullback? How do you know it's not a trend reversal? Where is it going to pull back to? You need to understand price action to trade pullbacks. It's not as simple as, hey, look, here's a pullback in a doji. Okay, what you need is to understand that how to trade pullbacks, but to focus more on breakouts. Breakouts are far more powerful, really. Okay, Ali, I hope that answers your question. Okay, brilliant. You're welcome, Ali. Adan, okay, I don't know what that was for. Did you ask me a question or something? So could you please repeat that? Okay, I think that's it, guys. I don't think there's any more questions. I really enjoyed that, by the way, guys. I enjoy that. This is what I'm here for. I don't want to just do technical analysis. I don't want to just go through the charts. I want to be able to engage with you guys and ask questions. And even if you disagree with what I'm saying, tell me why, so that we can have a conversation about it, rather than me sort of just do analysis and not know who I'm talking to. This is not what I'm doing my FX Street webinars for. My FX Street webinars are to meet people like you and to interact. Everybody's fear threshold is different, so everybody should plan before execution. Yeah, exactly. Really good point. Everything should be planned before execution, and that's where a lot of people go wrong. They don't have a very good exit management system. That is kind of like guesswork. Once you've had your entry, everything should be methodical. There should be a logic to it. There shouldn't be any subjectivity. So I totally agree with you, Forex Piper. You should have a trading plan. and ultimately stick to that trading plan, because a good trade is where you stick to your trading plan regardless of the outcome. If it's a losing trade, it's a losing trade. It doesn't matter. You stuck to your trading plan. Losses are part and parcel of trading, but always keep your losses small. When you are in a winning trade, compound, cover your losses, make massive growth. A good question. What do you think of robots? I personally think that signals and robots are not the way forward, because a lot of the times when you look at signals, people that sell signals, they'll give you, hey, look, I've created a signal service. It has an 80% success rate, but it's all back tested. You can't come up with an 80% success rate without back testing it. But what do we know? Past results are not an indication of what future results are going to be. So I would stay well away from robots. I would stay well away from signals. They do not work. It's a fantasy. It's a modern day fantasy because of the internet. Because the internet has allowed us to use technology, people then think that technology can be used for everything and anything. It can't. There's still limitation to robots. There's still limitations to software. The software is not as powerful as the human brain. You cannot allow something weaker than your brain to dictate and control your trading. Your brain is the most powerful thing on the planet. So to go down and start using robots and signal service is to do yourself total disservice. The only people that make money from robots and signals are the people that sell them. They're selling robots and signals for £50 a month, and they've got 100 people paying £50 a month for robots. How much money are they making? How much are you making? Yeah, exactly. You know, robots and signals can only work in certain conditions. Maybe that robot is created to work in a range bound market. As soon as it breaks out into a trend and you're using that same robot, it becomes extinct. Exactly, you're totally correct. So no, stay away from that kind of stuff. Learn to trade, learn to understand price action, treat it as a business, get good software, understand what you're doing. Okay, guys, thank you. Forex Piper, thank you. Ali, thank you. Joe, thank you. I don't know who else was in here. Adan, you didn't come back to me, but you know, thank you for the comment. Guys, thank you all very much. Have a great day. Okay, I'm just going to quickly direct you to some of my websites. If you're not following me on a few bits and pieces, I will direct you to that right now. Okay, so the first thing, as I've already mentioned, please check out my website. If you want to know more about my approach, how I trade trends, how I compound, manage stops, exits, entry, if you want to learn how to eliminate fundamentals, focus purely on technicals, if you want to know how to adapt this around your job, I'm sure a lot of you are working 9 to 5. Day trading is not always the best way to trade. Trend trading is far more powerful. When you look at the bigger picture, it doesn't matter what's happening intraday. Okay, so this is what I'll teach you guys. I'll teach you guys how to adapt this around your lifestyle. So please check out my website, which is zaheer.tdtpro.live about. The next training, live training online is next Saturday, the 6th. And it's now £295 plus VAT a month, okay? You can stay 1 month if you choose and then go on to the bespoke training or take the information and apply it to yourself on other software. Whatever I train you can be replicated on other software. But the information that we give you is much sought after. You're not going to find this anywhere else. It's from a trend trading perspective. 6th of February is the next one, okay? If you're not following me on Instagram, please follow me, fx.mentor. I put a lot of useful stuff up on here, charts. Also, if you go to my bio, I've got the link to my webinar, which is later on today, and I'll be covering Forex, stocks, and commodities. Okay, so 4 to 5 UK time, I do FX Street. 6 to 7 in the evening, I do my own webinar. Okay, so the link's on Instagram. TheDynamicTrader.com is our website, so please check that out. And if you want free blogs that we do by all our community members, if you go to bloggers, you see we've got a lot of community members that do blogs on foreign exchange, the indices, commodity stocks, everything's on here. So please check this out. If you would like to email me anything, please email me on Zaheer at TDT Pro. Sorry, I'm just putting that in there. Zaheer at TDTPro.com. Okay, I'm also just going to put this in the chat box as well. Control C, Control There you go. Okay, and that's the link to the apprentice training as well. Okay, so if you guys want to ask me any questions, if you want to just communicate with me, say hello, this is the way to do it. Okay, guys, thank you all very much for your time. Administrator, thank you again for this week. I've gone a couple of minutes over, so apologies for that. And hopefully see you guys on my next webinar, which will be in an hour and 13 minutes, 6 p.m. GMT. Thank you, guys. Take care. See you all next week on the next webinar. Thank you. Bye-bye.